Welcome to MFAA On Air.
Late last year, ASIC conducted a review of interest-only loans, finding that lenders are falling short of their obligations in terms of affordability assessments and matching a loan product to a borrower's requirements. With the current record low interest rates, the spotlight is again turning to interest-only loans. MFAA On Air recently caught up with MFAA Compliance Manager Peter Kennedy to discuss when an interest-only loan is suitable for a client and when a broker should be recommending against the use of one.
Brokers realise that they've got responsible lending obligations, as do lenders, and that is to determine a person's financial situation, determine their needs and objectives, a very important one, and to verify that financial situation. Brokers need to be careful about looking at an interest-only product. ASIC's already stated that it thinks, for example, that a 10-year interest-only period is perhaps inappropriate. I think the way to help avoid this is to ensure that you have good documentation on information that you've recorded about requirements and objectives particularly, and about the process you've gone through to gain expense and liability information as well as income information, of course. One tricky part of this is the volatility of income. ASIC's really honed in on this in their report 445. Sometimes it appeared to them that lenders might have been, I won't say ignoring that, but using perhaps inappropriate calculations on what actual income was, and likewise actual expenses were. I think it's really important that a broker look at that period where the interest-only period is going to end. That will be part of the assessment made about whether a loan is suitable or not suitable. But they need to keep that in mind about when the interest-only period ends, what sort of loan will the borrower end up in? Will they need to refi, or will they just go to some standard product? But that potential rate jump needs to be taken into account, and it's a concern with, particularly with lenders now potentially increasing rates. Well, there's a warning sign, obviously, if a broker sees that, even if a consumer wants an interest-only product, if that doesn't align with their needs and objectives, the broker is obliged to tell that consumer that this is not an appropriate product.
The MFAA sets high ethical and professional standards for members. Visit the website or contact the MFAA to find out more about the resources and support available to help members meet these high standards.
You've been watching MFAA On Air.